NIO is building a real case for a bottom right now, and I'm going to show you exactly why the data backs that up. NIO has been one of the most beaten down EV names out there, but something shifted recently. The stock is sitting at 630, up over 1.5% today, and our composite score just landed at positive 65.2, which puts it firmly in bottom signal territory. Here is why I called it that. Let us start with the moving averages, because this is where the story really begins. NIO is trading at 630, and it is sitting above all three of its key moving averages. The 20-day EMA is at 5.67, the 50-day EMA is at 5.39, and the 200-day SMA is at 5.46. Think of these moving averages like layers of a foundation. The 20-day tells you what the short-term trend is doing right now. The 50-day tells you what the intermediate trend looks like. And the 200-day is the long-term floor that institutions watch closely. When price is above all three, it means the stock has reclaimed structure at every time frame. That is not something you see during a downtrend. That is a trend reclaim, and it matters. Now here's where it gets interesting. The RSI, which measures how overbought or oversold a stock is on a scale from 0 to 100, is sitting at 64.1. That is approaching the upper range, but it is not overheated yet. Readings above 70 are where you start worrying about exhaustion, and we are not there. The MACD, which tracks the relationship between two moving averages to show whether momentum is accelerating or decelerating, is showing an improving signal right now. That means buying pressure is building, not fading. The ADX, which tells us how strong the current trend is at 20.1. That is right at the threshold where a trend starts gaining conviction. Momentum is turning positive across the board. On the volume side, the money flow index is reading 58.1. The MFI is like a volume-weighted RSI. It tells you whether money is flowing into or out of a stock. A reading above 50 means more money is coming in than going out, and at 58.1, NIO is seeing net inflows. That is accumulation behavior, not distribution. Smart money does not quietly buy a stock that is falling apart. The fact that money flow is positive here is a meaningful signal that buyers are stepping in at these levels. The pattern picture is where things really come together. NIO has printed a double bottom formation. A double bottom is one of the most reliable reversal patterns in technical analysis. It means the stock tested a low, bounced, came back to test that same low again, and held. That second hold tells you sellers are running out of ammunition. On top of that, the Bollinger Bands are showing a squeeze forming. Think of a Bollinger Band squeeze like a coiled spring. When the bands tighten up, it means volatility is compressing, and that energy has to go somewhere. Historically, squeezes resolve with explosive moves, and given the other evidence here, the bias is to the upside. From a market structure standpoint, NIO is showing a bullish change of character, which traders call a chi-chach. This is significant because a change of character means the stock has broken the pattern of lower highs and lower lows that defines a downtrend. When that structure flips, it is often the earliest signal that institutional money is repositioning. The Z-score, which tells us how far price has moved from its statistical average, is at 1.62. That is elevated but not extreme, suggesting the move higher has room to continue without being considered a blow-off. On the levels, NIO has three layers of support below it. The first is at 603, which is the closest floor if we see a pullback. Below that is 568, and then 543 as the deeper support zone. On the upside, the immediate resistance is sitting right at 640, which is just 10 cents above the current price. Breaking through that level cleanly would be a meaningful confirmation. So here is the bottom line on NIO. The composite score is 65.2, which puts this squarely in bottom signal territory. This is not a tentative call. The evidence is stacking up. First, price has reclaimed all three key moving averages. Second, a double bottom pattern has formed, showing sellers are exhausted. Third, the Bollinger Band squeeze is coiling for a potential breakout. Fourth, money flow is positive with the MFI at 58.1, confirming accumulation. And fifth, the market structure has flipped bullish with a confirmed change of character. 5 separate signals, all pointing in the same direction. That is a bottom signal, not a coincidence. For the bullish case, The first thing you want to see is NIO breaking and closing above that 640 resistance level with conviction. If that happens, the next target zone opens up towards 7.0 and potentially higher as the Bollinger Squeeze resolves. The cycle stage is at 4, which suggests this stock is in early accumulation. If volume picks up alongside the breakout, that confirms institutions are participating and the move has legs. Now for the risk side. If NIO fails to break 640 and rolls back over, the first warning sign is a close below 603. That breaks the nearest support and puts the double bottom pattern in question. A drop below 568 would be more serious, and if price falls back under the 20-day EMA at 567, the bullish structure starts to unwind. At that point, the thesis is broken and you reassess. 3 things to take away from this. 1. NIO has printed a double bottom and reclaimed all 3 major moving averages, which is a structural shift. 2. The Bollinger Band squeeze is set up for a potential breakout, with the bias pointing higher given the other signals. 3. The composite score of 65.2 puts this in bottom signal territory, but the key confirmation trigger is a clean break above 640. That is today's Dip Detective deep dive for NIO. Subscribe for more bottom or trap breakdowns every week. And as always, this is not financial advice. Do your own research and manage your risk.